Coming up on Market to Market, the eastern seaboard holds on tight as Hurricane Florence comes ashore. Fighting back against the growing opioid crisis in rural America,
COT reports
and
today,
market analysis
since
with
the
Brian
third
Roach
week of January,
next.
all crops, oilseeds.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.
This is the Friday, September 14 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. Rising prices made Americans think twice about buying clothes and cars last month, but getting a gallon of gasoline made more than one driver wince. Retail sales grew 0.1% in August. Even without gas and food, core retail sales were on the same pace. As prices rose, so did the cost of living. The Consumer Price Index bumped up 0.2% last month. When food and energy are pulled from the equation, core CPI was up 0.1%. Controversy was already swirling around Hurricane Florence before it made landfall at the end of the week. President Trump diverted $10 million from FEMA coffers to pay for immigration detention centers in the months before the Category 1 hurricane came ashore. The administration says the money was never slated for disaster relief. Hundreds of thousands are currently without power along the eastern seaboard as sustained wind speeds hit 90 miles per hour. Josh Bittner has our report.
And this is going to result in prolonged, very heavy rainfall.
This week, the nation braced for impact as Hurricane Florence steamrolled toward the eastern seaboard before pumping the brakes to make initial landfall as a Category 1 storm in North Carolina.
Even if you've ridden out storms before, this one is different. Don't bet your life on riding out a monster.
This hurricane is likely to have impacts statewide, not just our coastal areas.
All week long, Mid-Atlantic governors urged millions of residents along a 300 to 500 mile swath of coastal and inland areas to flee from the 400-mile wide cyclone's projected path.
Throughout South Carolina, we'll have heavy rains, we'll have heavy winds, we're going to have power lines down. People, we need to prepare.
And while the Carolinas and Virginia declared mandatory evacuations in some areas, even rerouting interstate lanes to accommodate outbound traffic, the National Oceanic and Atmospheric Administration's hurricane hunters flew into the eye of the raging tempest to collect data.
Across the state, it's going to be flooding and the rivers damaging stuff, but here it'll be wind, down trees, stuff like that, windows knocked out.
Downplaying warnings, some hunkered down across the region, pulling boats out of the water, boarding up homes, buying up supplies, and safeguarding animals.
There's a lot of people in this neighborhood who have lived here for generations and past hurricanes, and it's never really flooded right here before, so we're not really all that worried.
But the Federal Emergency Management Agency, or FEMA, had sobering words for such notions.
We need our message out that this is a very dangerous storm. It's going to impact many of our citizens in multiple states, not just on the coast, but definitely inland.
Amidst heavy rain and intense flood threats, the president echoed federal first responders who said they have all the resources they need to react swiftly. Hurricane Florence is poised to be the latest displacement for Carolina agriculture, which in recent years has let loose a severe weather thrill ride. Though lean hog prices jumped 2% midweek as the storm raged in the Atlantic, producers in North Carolina, with the second highest output in the nation, scrambled to figure out where to stash their swine with 10 to 20 inches of rain forecast. Palmetto State farmers and agricultural officials fear catastrophe for South Carolina's cotton crop. up 10,000 acres over last year to 260,000 acres. Conservative estimates warn of a $2 million loss if the bolls are wrung out ahead of harvest. Officials continue to caution the threat of heavy rains and dangerous flooding as the system trudges inland over the weekend. For Market to Market, I'm Josh Bittner.
The problem of opioid misuse knows no race, color, creed, or ethnic origin. It is a problem for both urban and rural families. 2 insurance companies have stopped paying for the fee for OxyContin, one of the key culprits in the ongoing opioid crisis. They are only one faction in the legion of people facing the problem head-on. John Torpy has more in our cover story.
What do you guys got? Possible overdose. There's some stuff sitting on the table there. Can you wake up for me?
I think the best definition of addiction that I've ever heard is an irresistible urge to perform an irrational act. An irresistible urge to perform an irrational act.
Over 2 decades ago, painkillers derived from synthetic morphine were seen as a miracle drug for patients coping with chronic pain. Since then, numerous forms of synthesized narcotics have made their way into doctors' offices and pharmacies. According to the Centers for Disease Control, as the number of opioids increased, so did addiction rates. The Trump administration has declared the problem a public health emergency.
They hit people with suits, with dresses, indiscriminate. But because the perception of risk were down, it was like inviting the drug dealer to your child's birthday party. You know, they were just handing them out because it was supposed to be thought of as a good thing.
In 2015, the CDC reported over 33,000 deaths nationwide related to opioid overdose. Over the past 2 years, that number has more than doubled.
It's hard not to look at it as a war. We've gone from 64,000 people dying in 2016 to 72,000 in 2017. That's over a 10% increase in fatalities when we know what the problem is, when we have a grasp of this problem of opioids. So there has to be some deeper issue systemically.
Wake up for me, dear.
Those developing the strategies to fight opioid misuse are fighting a war on 2 fronts. One is availability. Officials with the Iowa Governor's Office of Drug Control Policy are concerned medicines like Percocet, OxyContin, and other fentanyls have a safer persona than illicit drugs. Komendowski believes that safer persona creates a climate for addiction. The other front is the amount. Federal government officials contend, with a perception of low risk, opioids have been prescribed in ample amounts, with little concern for misuse. Making physicians aware of how many pills are being written into prescriptions is one way opioid misuse is being confronted.
Previously, you'd see a prescription come in maybe for 60 tablets. Now we're seeing more prescriptions written for 30.
As a licensed pharmacist
Bring that with you, though. Okay.
And legislator in the Iowa House of Representatives, John Forbes uses his unique position to help craft legislation aimed at helping curb opioid misuse in rural Iowa. But Forbes knows he and his colleagues on the other side of the pharmacy counter are on the front lines of fighting the epidemic.
Pharmacists just need to be vigilant whenever they have a prescription presented to them that they have questions about.
A tool pharmacists use when a suspicious prescription comes to their attention is the Prescription Drug Monitoring Program. Established in the 1930s to track Schedule II narcotics, the program has evolved to an electronic database stretching coast to coast.
We check that database on new prescriptions, especially patients that are new to our pharmacy, to make sure they're not doctor shopping or going to multiple pharmacies to try to obtain controlled substances.
Last year, the Drug Enforcement Administration stepped in to help slow the opioid epidemic by allowing pharmacies to partially fill prescriptions.
A program like this helps keep larger quantities of opioids out of the system, so there's less chance for diversion.
Let's go ahead and give that Narcan. Narcan. Verified.
A life-saving drug helping addicts who have overdosed is a medication called naloxone or Narcan. This product can bring someone out of an overdose in minutes, but it also has a high price tag.
Narcan going in at $15.07.
One dose can cost up to $100, which can strain small-town budgets. And it comes with one important caveat.
It's an opportunity to treat and care for somebody, to intervene. It's not a cure. And that's the biggest misconception we see with naloxone.
One place that treatment and care can be found stretches over a 7-county area in north-central Iowa. Prairie Ridge Integrated Behavioral Health Care in Mason City. It's a treatment center exploring new ways to help people cope with addiction, combining mental and physical health services with recovery treatment. The center uses state-of-the-art technology and strong doses of compassion to help shrink misuse disorders in rural Iowa.
That's the thing we have to keep working on, is to make substance use and mental health treatment part of our healthcare system, not something that's viewed by the public as a weakness or a moral failing. It's a biochemical brain disease, and it's really time that we focus on that as opposed to an act of willpower or lack thereof.
And when the consequences hit American culture anywhere, low population, rural areas where the density is low, they have the least amount of health care, the least amount of counseling, the least amount of resources for public safety, they're at risk for much longer than where we can apply all the big money and resources.
All right, she's waking up a little bit. What's your name?
Tiffany.
Officials in the Hawkeye State see a long fight ahead that will require a balance between limited funding and scarce resources. They also believe to win the war will demand an increased respect for the medicines being prescribed. For Market to Market, I'm John Torpy.
Next, the Market to Market report.
The WASDE shook the grain markets while Hurricane Florence bumped the hog and cotton contracts around. For the week, December wheat had a volatile week and finished flat, while the nearby corn contract fell 15 cents. The November soybean contract ended the week 14 cents lower as the USDA report pushed against news of Secretary Mnuchin's meeting with high-ranking Chinese officials. The December soybean meal contract fell $8.30 per ton. December cotton rose as Florence threatened the South, only to finish the week 16 cents lower per hundredweight. Over in the dairy parlor, October Class 3 milk futures lost 28 cents. The livestock market finished on a high note again this week as the October cattle contract put on $3.85, October feeders added $5.93, and the October lean hog contract rose 58 cents on hurricane news. In the currency markets, the U.S. dollar index lost 40 ticks. Crude oil gained $1.24 per barrel. COMEX gold added 70 cents per ounce. And the Goldman Sachs Commodity Index gained nearly 3 points to settle at 463.70. Joining us now to offer insight on these and other trends is one of our regular market analysts, Brian Roach. Brian, welcome back.
Thanks for having me.
Brian, we had a big report this week come out with the WASDE, of course, and I want to start tackling that here as we look at the wheat markets. The USDA left domestic wheat production and wheat balance unchanged, yet wheat had a very bearish reaction when we look at Wednesday, Thursday, the rest of the week here. Finished a little stronger on Friday, but why such a bearish reaction to start?
No real, kind of a mixed report from the USDA. I think what the trade was looking for was a smaller production number from Russia. We actually got a 3 million ton larger number than what the trade was thinking, and I think that put the specs back into sell mode. No reason to back off on the selling side. But the good news is, in wheat, is that stocks-to-use ratios are tightening the first time in 6 years, or in the world and in the U.S. I think we've probably seen the largest production number here for a little while, and so I think that keeps a bottom in wheat. We held $5 in the soft and the hard red, which I think is good, and at the same time we're in buy signals, so I think the market's probably trying to find a bottom here, and today, Russia came back in and is talking about their export commitments again, and real quickly we see that there's some buyers that come back to the market. So overall, I think the wheat trade looks favorable into the spring.
Does it feel like Russia mentioning their exports being cut again or potentially cutting those exports, does it feel like they're trying to throw their weight around in the wheat market and see how much of a reaction they can get?
I'm not sure. I think they're always going to be somebody who creates headline risk and headline news, which is very hard for farmers that we deal with to respond to. So I think you ignore that type of day-to-day noise and stick to the bigger picture approach to marketing and risk management and that sort of thing, and that will find its course, in time.
Mm-hmm. What's your next downside target for Chicago December wheat?
I don't have much downside target.
Okay.
I think it came down.
Levels of support then, perhaps?
$5 is a good number. I mentioned that before. Maybe $4.95 might come into play. But the risk in the wheat market is really that the specs, and this could bring my number lower, of course, so I'm not really quite sure. But the market's set up to create a bottom here. But the problem in these types of situations, the specs still have a fair amount of dry powder to sell. They're not anywhere near the net short position that we've seen before. So could they sell the market some more down? They could, if there's a reason to. But I think the fundamentals tightening up, stocks-to-use ratios tightening up. I don't know if there's a lot of downside. There certainly could be, but let's just see how this goes.
Okay.
Yeah.
Let's talk about the corn markets, because I think they maybe got the biggest surprise this week with the WASDE raising yields to 181 plus. Do you anticipate that we will actually see that record yield this year, even with all the weather problems we've been having?
Well, yeah, I mean, the yield's obviously a lot bigger than everyone thought, but when you look at the populations that we're putting in the ground, we had a really good start with good germination, 29,400 stock or ear count per acre, which is a record. And you combine that with an ear weight that's slightly better than last year. I think it's there, and I've been talking about a 180 yield for since winter as the potential. The yield trend tied to technology is there, and this year is just another year like last year where it shows its capability, and the farmer has to recognize that in their marketing plan, because we're just continuing to see that pattern over and over. So. The setup, though, in corn I think is positive in a way that stocks-to-use ratios are tightening for the third year, even with this 181.3. And if the 181.3 is a little high, maybe it backs off a little bit. But when we put in the lows last year, we were trading a 2.5 billion bushel ending stocks number, and now we're trading a 1.7 billion bushel ending stocks number. And so I don't know that I see a lot of downside in corn unless something hard to forecast occurs, which certainly could. But I like the setup in corn into the spring. I think farmers just have to put it away and try to, if anything, mitigate storage costs to some degree, and then look for a selling opportunity into March maybe. So maybe offset some storage costs and then be long the futures market into March. But I'm thinking that the export number probably outperforms. Ethanol stays strong, if not gets a little bit better. And so I think that leaves us set up to think about something lower than 1.7 into next year on an ending stocks number in the U.S. and certainly in the world. Will be a competitor. We are the deal for corn, and so I'm okay here. I mean, prices are not good, but how long has it been since prices were great at harvest on anything?
Right, and you mentioned there, I want to go back just a second, you mentioned harvest lows is generally around the time of year when we put them in, is right around now. We definitely had market echoes after that WASDE report this week in the corn markets. Do you think that was the market signaling to us that is the harvest low for the year?
Hard to say. 350 has been a good support level, which was the low, the July low. And we put a 348 and 3/4 this week, so it's a new low. But let's just call for the sake of discussion, 350 is a good support level. I don't see us, for everything I've already kind of covered in terms of tightening world stocks, that we need to put in a much lower number. So I would guess that we'll be into buy signals at Roche Ag next week. Again, though, the specs will not be at the net short that I'd like to see. So that does leave a little bit of wiggle room.
Right.
But for someone on the end user side, I think they're going to be very interested in this type of board price and cash price, and then using some sort of structures into the deferred contracts to get corn bought all the way out to next July at these kind of levels. So we're getting another shot at it. I think that's okay.
Okay. Brian, I'm going to take a social media question here from Nathan in Iowa. We've talked about the corn part of this question, so let's stick to really talking about beans. He said 4 producers who aggressively sold ahead this summer but find themselves with even larger crops in the field. What's the best strategy for unpriced corn? In this instance, let's stick to beans.
What's the best strategy for unpriced beans? The problem with beans, and we're kind of getting to the next topic here, is the cash market. And if you look at the national basis at $1 below the board, that's really where I believe the tariff is really weighing in to the U.S. market. It's in the cash. Futures may have a little bit of more downside because of that, but that's really where the problem is. And so farmers cannot defend a sale at the set with a 7 on it. There's no way to fix that. There's no way to defend that perhaps on paper. So I think what a farmer's gonna have to do is figure out how to not sell it, bag the corn and put the beans in the bin if you have to, but making sales here will be very hard to offset on higher prices later on. Let's say, for example, the trade deal winds up and something happens, and post-November elections we have a better situation. My opinion is that the cash market could be the one that responds the most. And my reason for that is there's no product moving. There's no, the trains, I was at Husker Harvest this week, and typically in that area you have 30, 40 trains moving to the PNW at this time of year, 4, 5, 6 at this time, this year, this past week. And so I think that they have to figure out how to not sell anything and put it away.
All right, Brian, let's continue this soybean discussion in Market Plus. I want to get to cotton here because they definitely had a swinging week with Hurricane Florence. How much volatility is that adding to the market, and how much has already been priced in at this point with Hurricane Florence? Yeah, well, so we saw the USDA didn't really offer much, so the Hurricane Florence has probably more to do with it, but then prices kind of backed off. We're not growing a big portion of cotton in the U.S. out there in the East Coast, so stocks-to-use ratios in cotton, though, do tighten up by like 7.5% in the world versus last year. So cotton actually is looking, it's well supported, I think, and we'll have to buy acres into the spring. With beans where they are, cotton, wheat versus beans certainly be part of the mix. And so I like cotton where it's at. It's trading sideways. A producer might look at the high end of the USDA price forecast at 80 cents, and that's cash, and so that he might look at that as a kind of a target at some point out into the spring, but right now, not much to say about it. Okay. Brian, let's talk about the meat market, especially the live cattle market. We finished almost limit up on Friday. What's adding some stability to the markets or some price movement? You'd have to think that the fats are getting a little overflow support from the hog market, but I think that if you begin to trade, it's obviously the trade is considering that, but also considering that supplies, cattle supplies, seasonally get tighter on into the next few months, and that's playing some sort of a backdrop here to the cattle market moving higher. We triggered a sell signal in the fats this week earlier, but the kind of sloppy cash trade was not really there. We're really looking for more firm cash trade. But with this higher move here today, September strong, I think that if you look at February contract around 118, which we actually clipped today, that you have to kind of raise your sights a little bit to maybe 124, 125. But these are pretty good moves here, both in the fats and the feeders, and I think cattlemen will want to begin to lay off some risk. All right, I agree with that. Let's finally wrap up here with the hog markets. I think we have to talk about what's going on with the African swine fever. Will that add, or should that add, any domestic support for hog producers, Brian? I don't see a lot of downside for the pork right now. We saw a couple more cases in China today. I think something new in Belgium. So that, plus we're shutting down a fair amount of production in the East Coast, which I think keeps things well supported. And then also wholesale demand has perked up from very low levels. So the real trick here is to how to play it. And one way you might look is the October-December spread is typically minus 60 to plus 50 cents. That normally trades 350 to 450 to 5. That might be something to look at, but also look at February as a good place to start laying in some hedges. And same thing, we just circle back to the feeder cattle. You need to start laying off some risk out there in the feeder cattle in the spring as well. Okay, Brian Roach, thank you so much. We'll continue this in Market Plus. You're welcome. That wraps up the broadcast portion of Market to Market, but we will keep the conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at iptv.org/MTOM. Check out our YouTube channel. Tell everyone you've clicked subscribe at youtube.com/market2market. Join us again next week when we'll explore how tax credits are helping the wind industry spin faster. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.